Greetings, market rebels. Welcome to this week's macro measure. I'm Wayne. My partner Ryan is working on the market outlook for the week. It is December 4th, 2022, a little after 1 p.m. here on the East Coast. We'll get into this week's macro measure after we check out this trusty disclaimer. And also we check out the intellectual property rights notice. So now that we've got those down, let's see what we can do in terms of charts. All right. So here's the first thing I'm going to look at, just as a reminder to set the stage for what's happening now. We are barely into December, and you can see there's a pretty pronounced dip that works its way in right around mid-December, depending on exactly which one of these years we're looking at, what conditions we're looking at. But then eventually, right, the dip pretty much gets bought, and what a shocker, right? But you end up strong. So this seasonality is where we've been focusing on, is where we really still are, because I think the seasonality this year has worked out relatively well, especially of late. The seasonality has been playing along, and the other seasonality charts that we have too would bear on this, but we've seen those many times. And so we're now here about a week or so away from the middle of the month. So that makes it interesting in that, do we get a little bit more rally and then drop if the seasonality continues to unfold according to the pattern? That's the big question, I guess. Or, right, do we swoon earlier and then come back and rally for longer? Maybe. Who knows, right? That's always the thing. You can do as much work as you possibly can. You still can't know for sure. But let's check in on a couple other things just to kind of, again, set the stage. And here's the number of stocks that are above their 20-day moving average. And we've noted that this has been high, and its companions have been as well. So if we do the MMTH, we'll also see that that's very high. And if we do the 50, work our way back to the MMFI, I think it is. There you go. And that is again high. So that's telling us, we've seen these periods before. And if we take a quick gander, we switch over to the SPY. I think I've got some vertical red lines on this chart, I think. Yes, and that's where we've gotten some of those really high readings on things that we were just looking at, and that's really been near highs, right? So we're getting up there, so we have to start, I think, respecting that we've gotten up there for sure. So I think we've been giving the bulls really the benefit of the doubt now for probably a month or month plus, I would ballpark, just in my memory, thinking that we could work our way into or towards this area, much like we've seen some of these really interesting rallies that have occurred during the year that is 2022. And we got there, and we got to the 200 in purple on the SPY. We got to the resistance line we've been working with for a very long time, that we've had to literally extend. We started working on it here, had to extend it all the way over, and then again all the way here. We've been waiting for this as a possibility, and it fulfilled its destiny already by getting to, I think, the 200 and then our resistance line. But the question is, what happens now? I would say, look, I think the bulls are still in control of the market until proven otherwise. We see the seasonality as well. When I look across, I feel like things are a little bit overdone right now. So that makes it a tough call for the next few days. But I still would give the bulls the benefit of the doubt until really we see some sort of pullback that would be significant and would then see some significant support give way. And you can see that all the short-term moving averages, the 10, the 15, the light blue, the 20, they're all the SMAs, if you're new to this, and they're all just stacked and sloped. So one above another and trending higher, crossing over the 100 in dash white, and the rust color is the 150. working their way up to the 200 in purple. So there's a lot of good things going on. You could see that this was a really big, with the Powell day that we talked about being really the fulcrum of the week. That was the case, and it turned out to be a bullish outcome with strong volume, not incredible, but still pretty strong volume. And you could see that the pullback that we had after that on Thursday was on lighter volume, and then slightly higher volume on Friday. So the bulls came right back. So that's, again, another thing that's made it tough, because they didn't really take much of a breather. They pretty much took a 1 day and a gap lower breather and then started buying again, which is a good sign if you're a bull. But had they taken a few more days, come down to here, maybe kiss the 20 SMA in blue, and then slowly work their way up, they could have used very little energy to be right at this big resistance line, which makes it, in my mind, makes it easier to push through, because you haven't spent so much energy running to it. If you spend this kind of energy running to it, where you gap up, there's a big energy spent, 2, 3, 4, 5, right? You've spent 5 days plus that included dramatic gap working your way up to resistance, and then it's just harder to get through as a result, because the buying, it's hard to sustain that for 7, 8, 9 days, especially when the primary trend is down. So that's where this is how I'm looking at it, is that this has got to work its way through. I'm still thinking that with these gaps back here, there's a few gaps that are right back in here, and probably the highest gap we get closed at about 425.50 in the SPY. I'm thinking that's still possible, and it wouldn't even really put us outside of our upper Bollinger Band as well. Plus, I'm also thinking that, let's face it, the Fed is coming together, I think, about 10 days from now. I want to say 9 or 10 days from now, which would be mid-month. And that's when the final Fed meeting of the year will take place. And as of lately, they've flipped the script, and they like what Powell has to say, and other Fed heads. So could it continue? Possibly. Didn't get a chance to talk about this because I had technical issues on cocktail hour, but everyone can probably see the inverted head and shoulders I think is here. It's a compound. There's multiple shoulders involved here if you want to go there. But let's make it easier. Sometimes, just if you're new, especially, it's easier to see things when they're inverted. So this would be inverting something that's inverted. Didn't seem like it did. Oh, there it is. Yeah, so you could sort of see that, where you got this highest point, you got lower shoulders. There's a couple. Oops, nice. Well, let's go another different way here. SD, and then we'll go back to minus SPY. All right. So let's go think or swim. Okay, so you can see that, and so that looks like, hey, this. If you look at it this way, I think you may be able to see it a little bit better. We're inverting something that really is inverted, but we're just trying to get some visual clarity, and you could see what's up with that. And this doesn't look very good, I think, if you invert the chart, just as if it doesn't look very good. I mean, it does look very good if you go conventional with the chart as it currently is. So there it is. So yeah, so that's interesting in and of itself, because as we talked about on cocktail hour, if they push this thing through to go from 348, and let's try to find maybe I can find a more fair shoulder level, but I guess it might be right up in here, 348 to about 420. So you're talking about 72 points. Would be a 100%, say, measured move. Even if you get 50, you get 36 points from here. Even if some people like to work with 50 as for projections, then if there's more to it, then great. If you get 50% of the 72 and you're at 36 through 420, there's 456. Doesn't maybe get you to the all-time high, but that would still be one heck of a move. It might put you right near here. That's 462. So it would put you just shy of that prior high. But of course, you would exceed this high, and then there'd be all kinds of debate raging about whether we're in a bull market, we're in a bear market. I mean, I've got to see this trend get broken through tested ideally and then holds and then goes, and that high that it made on the way out gets exceeded. And then I'm starting to think, okay, well, that's a good start to it. And then if they take a high out and they hold above there, then that's bettering the situation if you're a bull. So that's the kind of ways I like to look at it, but in just a simple way. But this is very, this is very interesting now because we've weighed things out to a great extent. And especially if you look at all the time cycles that I do, and in SPY, you're a little bit overbought, or I should say towards overbought on RSI on the daily, but you're still about 7 or 8 points away from 70 on that. And in terms of the weekly and monthly and things like that, I mean, you're not even close. So this does have plenty of, let's say, larger time frame room to move if it wants to. And as I said, I'm pretty much willing to give the bulls the benefit of the doubt because it's been the right move, right? It's continued. We've been saying that's really our way of looking at it predominantly for quite a while. And I think the bulls have it's been a good decision to treat it that way and treat the bull situation with respect and talk about the seasonality and things like that. But I would definitely want to see this support line here that I just made blue. I'd like to see that at least violated before I'm getting excited about shorting the market again. And of course, there's so many SMAs that are important just below there. The 20 in blue, the 100 is dashed white, the 150 is that rust color. So they're all waiting for it. And there's a gap here, the 50s here, down here in gold. So I would look for the first signs to be somewhere around here breaking. And if that doesn't hold, the gap gets filled, and then the 50 doesn't hold, and then it's really, you're probably going, I start thinking retest of this low and then just go from there. But I just work my way through everything incrementally. So take it as it comes and just adjust along the way. That's my basic mantra for people that are active position traders. But so this is very interesting because it wouldn't take much to break through this high. It's very close after really a day plus maybe of corrective activity. And the SPYs are lagging behind the diamonds. So let's take a quick look at the diamonds. When they've done very well, and what we would do now that this fell below that support line that we put in place. Again, this is why the news is so important. We should make that point while we can here. And this is why I said, right, I thought last week, overall it would make sense if they kind of back things off early in the week and then see what happens once you get to PAL. And I think that's the smart move, to not front run what's happening, right? Especially if you're going counter trend to it. And we did drop below our aggressively drawn support there, but you can only be a bear for a short period, because any prudent trader should not be overly bearish if you're a short-term trader going into a JPAL commentary, right? We all knew that was really the critical part of the week, and that would largely determine the outcome. So initial weakness is something we were looking at, and then you get that, and you say, well, what about your support line? Why wouldn't you short it? Well, you can, I think, if you do it aggressively quickly, where you get a nice little brief score, right? Something that's worth doing. But you can see, like, why press that when you're still above your 20, a rising 20, and an upsloping 50 and 100? I think you have to. I'm not a big SMA person, but that's not my main way of looking at things. But I'm just saying there's a lot of hints here, right? And knowing how the talk has changed, and how they've been shedding bad news and taking whatever they can from the Fed and treating it as good news that the tightening cycle may be over. But you can see that the diamonds took out the high, and they are ahead. They've even closed above that high now, a few times, and they're ahead of the SPY. But you can see they're also near the upper Bollinger, and it's been sort of a manic run to get here. But again, the other people's money crowd, they want to press their luck to get themselves some nice bonus material. by the end of the year if possible. And certainly, I think the Dow is only down a little bit more than 6% from the all-time high. And that my point has been this was built upon I think rosy expectations that were never going to be met in 2022, and now you're only down a little bit really, and all those rosy expectations have been undermined completely and then some. And rates are where they are. The housing market is cratered. Can go on and on and on. Globally, things are not very good. Blah blah blah. And yet you're only down a little bit. And this just shows you the power of what these guys are able to do. And that's why I've always said that when it comes to the modern market, ever since Greenspan got in there, I always give bulls the benefit of the doubt and expect the dip to get bought unless I have good reasons not to, because that's what they do. That's been the case. They feel like that everybody's chasing something, even if it's overvalued, and they'll keep doing it and doing it and doing it. And that's the modern market. So unless you've got a really good basis on the charts or what have you, it's tough to fight against them. But I want to come back to a few other things that I looked at. So we took a look at some of our percentage of charts above some key moving averages that a lot of folks follow. We know that this is high again, which kind of paints a backdrop of to be ready to be concerned. So I think you're back into a situation where you've got to be really careful. You can make a case right now. I think that there definitely should be some sort of a pullback. I think you can make that case. A pullback should happen, but as long as it holds and they just back it off a little bit, I would give them the benefit of the doubt as to the upside until the trend gets cracked, or at least the 20 SMA gets cracked on the SPY. But you can see where you are in the fear and greed index. Not a perfect measure by any means, but that just gives you an idea. I don't think they do the cumulative anymore. So you used to be able to take a look at the cumulative. Oh, maybe they do it. Okay, they just have it this way. But here's where we are, and you can see that we're right up in that 63 area. Right, this gets you close to some of these other market peaks. Right, this one's a little bit higher, but you get an idea. Like you got up there, and it's certainly right on Thursday. I guess they're showing it. Well, maybe that's when. I guess that was Wednesday, I think. But that's probably your highest reading, thanks to Powell. Again, right there. And then this also is another version that is out there that I tracked down, and this is up there as well, and it gives you a little bit more time. And you can see that we're up there. So I think we've got to be really careful. I hate to kind of come in with a third week in a row where I'm looking more like, let's just be smart. Let's not get too crazy with forecasting incredible things, and just kind of wait for this critical news to hit and then start to work with it and see how the market reacts. But I'm more concerned right now about the fact that this thing's up here and things have ran quite a bit. I almost feel like there should be some corrective activity that comes in, soon, to take a little bit of this out of it and then set them up for the Powell commentary on the 14th after the Fed meets, and then to follow along with that seasonality that we saw that they've not really been tracking right to perfection, but they've been tracking it fairly well for the last few months overall, right? Where you could see that October tends to be bullish, November tends to be bullish, and December tend to be bullish. In the end, right, you have to go through a lot of volatility in October, but it ends up generally closing a little bit higher at the very least from where it started. So those 3 months those first 2 of those 3 months are living up to the seasonal playbook, maybe not to perfection, but just overall. So there you have it. I mean, I think you've got to be, it just is what it is, right? I'd love to have something more clear, like, hey, like this thing back in here, break out through our resistance line, back up to it, hold, and then start going again, get above all your short-term SMAs on a strong day with big volume, and then that's a good sign. We don't always do these on critical days. We do these every Sunday. Unfortunately, I can't do one of these every day. It's too much other work to do. But this is this is it. I mean, you can see the different lines that I've got in there. So we should get caught up in that, even if they try. We should get caught up in a few things here on SPY, and it shouldn't be that easy to just blow through all this. But again, we don't know what news could be lurking. But just to give you an idea, right? Like if they do kind of pull things off towards the end of the year, 430 number is something to think about, and that's really about what 23. So call it 6% away. If you get 6% more, you're going to be up challenging this high. And remember, this is lagging behind the diamonds, which have already exceeded the equivalent high on their charts, on that chart. So it is what it is. I think the bulls are in control. If I look across my other screens that, I can't record all of them. If I look across them all, though, I feel like the bulls are in control. Now, it's early in the month to say the bulls are in control for the month. Very early, right? We need more data. But as of right now, they're in control of the daily and weekly. You could say this really wouldn't take much to break this out, right? A little bit more push, and this could start, working its way up. And again, I don't want to fight against this right now until we see some rounding over and some critical version of support gets cracked. I just don't like selling at levels just for the sake of, hey, it's a level I think is important. I'd like to see the momentum already in my favor to some extent before I'm willing to get in. I'm trying to really go for that so-called middle 80%. That's really the approach I ended up having to adopt after trying to get more than that middle 80 and really getting frustrated. But that's just the way it is. So let's see. Let's take a look at the Qs, which are a big laggard right now. And the Qs, you can see they're really lagging behind. They really are. But all it would take really would be a little bit, I think, taking out that high there. And theirs have a gap here. It's obvious to fill. This gap looks like it never got filled completely up here. So they've got some material to work with if they can get going. And the 200 would be a big deal. I'd take this out. I think the 200 becomes your next big deal that you look at. And then you look for this gap closure after that. I think that's where you go to. But you can see that they're rounding these things up, right, with the higher highs and higher lows, and they're very close. So how do you handle it? I maintain that you wait to see if it can break out, get involved if it does, make sure it's not a false breakout, of course, right? Keep your eye on it until it starts acting well and even healthier. And then, right, if it doesn't, get out, hopefully for just a wash, if not a small loss or small gain, and then get ready to go with what happens next. But right now, I still think the bulls are in control of the IWM, the Qs. They're in control of them until they start to falter. So if you're wondering, you're trying to make a tough call, unless we, right, remember, unless we already get oversold and we're kind of away from really oversold condition. I'm sorry, really overbought conditions. If we get away from really overbought conditions, I would continue to give the bulls the benefit of the doubt, just the way things are shaping up. That's just how I would continue to handle it. Knowing the seasonality and knowing that things can kick in. I'm not predicting this. We can only do so much in these videos, unfortunately, but right. Just think of what would happen if Apple gets involved in this rally, right? Look at these names that are really not involved, right? Microsoft's not really an incredible performance yet, right? We know that other stocks are outperforming these big tech leviathans. Excuse me, Google. Right, this stuff really has this could have a whole nother leg to it. Again, not predicting that, but if you want to know, and I know this is like rehash from last week, but if you want to know how would they do this, how would they continue to get this market goosed up if they've already ran so many stocks? Well, they would rotate. They wouldn't really aggressively sell some things that have worked out. They might just rotate out of something, start putting more money in some of these bigger names. Amazon's still kind of beaten down. But a lot of these big names, if they ignite those, of course, they could really help the cause. So again, I'd keep your eye on that. I'm going to, where did it flash? That's not what I wanted. Apologize for that. Looks like Thinkorswim is going a little haywire on me. It's making it difficult for me to see some of my screens. Where do they put this one on me? Nope. All my guesses are wrong. Nope. I guess it'll be one of the last ones that's hidden. No, it's not even that one. What am I missing here? Okay. So going through things, what I wanted to do is just check out DXY. So the dollar, we've been saying, right? Dollar going down, good for stocks, dollar rising, bad for stocks. And you can see where that is right now. And it's been on the ropes, right? On the ropes. And maybe it needs to have a washout and get below the downside Bollinger now that it's gotten down there. But right, unless there's some news over the weekend, that gets people concerned, I'm not sure. That's not a chart I want to go long yet, is what I'm getting at. It would take, right, it doesn't look like it's done any work to start attempting to reverse yet. And TNX, we've been looking at the 10-year yield, TNX pretty much all year long. And you can see that is on the 100. And not that this is the way to chart this like a security or whatever, but this is just reflective of where the 10-year rate is. But you can't like the trend, right? It's been a pretty big correction. you break through, that 100, and then you're looking at the next levels down. So that doesn't look ready to rise at the moment, and then the VIX, we'll kind of round things out with that. And the VIX, again, getting down to levels we've been potentially waiting on, from talking about it losing here. And then if it took this low out, probably would work its way down towards here and then towards our lower boundary, which is there. And you can see that that doesn't look very good right now. So overall, you can see that the bulls just have had control. I think they still have control. We need to see something change, I think, before we start doubting the bulls. And that could be that they just press their luck too much and goose things a little too quickly. Would be a mistake for them, in my opinion, if they back things off. That would help them out better. But this is one of my breadth screens trying to gauge the healthiness or legitimacy of a move. And if we put the spiders up there, you'll see that clearly, right, the spiders have been doing their thing to the upside. And you'll notice that after I'll put a white vertical line, but really a lot of this stuff, the McClellan stuff, etc., a lot of this is really continue to improve, which is one of the reasons why I'm not really fighting. Another reason I wouldn't fight against what's been happening, because it's not complete BS, right? It's not completely manufactured. There are some healthy signs that are part and parcel that are coming along with this. Now, that could just be wishful thinking, legitimate activity, and then it all falls apart again, no doubt about it. But it's not as if they moved this up on nothing but gaps. There was no real buying, and it was very narrow. It hasn't been. I mean, it's been pretty decently solid in terms of a rally, I think, even if it is a bear market rally ultimately. And I'm still thinking that it is myself, but I will flip around if they start taking out this and holding. The first sign would be to get above resistance and then maybe test it and hold and try to go. But overall, we've been noting that this is looking okay. It's not looking bad. So again, I don't want to get in their way. So that's really where I'm at. Again, it's not easy right now. There's a lot of resistance right here. If you're a bull, I would love, if I'm a bull, I'd rather have a couple of listless days, maybe one weekday. You come down here, reverse on Thursday and Friday, get up to here modestly, and then set up for the Fed, which has been the bringer of good news lately. And I'm not predicting that they will again. I'm just saying that the way that the reactions have shifted, they've generally now been, positive when Powell has something to say. So that's the mode they're in. You could say, well, that's just them selecting to do things that way and to act bullishly, react bullishly because they're trying to push it for their bonuses. You said that, you'd get no argument with me, but this is what they do. And so we have to take note of it. It's just part of the behavior. We know what their motivations are, but they're not, they're not in the clear yet on the SPY, which is the main proxy that we use in the macro measure video to chart the market. And the reason why we don't chart SPX, just so folks know, is because a lot of people like to trade off of the actual ETF levels that we mentioned sometimes and things like that. But that's where it is. I mean, I think to sum things up, I think you have to say, look, bulls are in control. They're pressing their luck a little bit, not crazy, but they're pressing their luck a little. I've got to be really diligent right now because there's a lot of things flashing, kind of early greed signs and other greed signs that I've got to be respectful of. But so that might be a couple sharp sell-off days here or there or whatever. But until they crack, until they crack support down here, like we talked about, I'm going to give them the benefit of the doubt for now. And then if I might change that if I see more of a topping formation, right? If we get a big pop and then it starts to get too vertical and then much like here, and then you fall through support, and I'll just draw where that would be. We probably had it at the time and I probably took it away. I'll try to give you just a general idea right about there. Fall through there. Yeah, I would then start saying, okay, you popped up too much, you fell through, you couldn't hold this former resistance line as support, and you fell right back through, and now you're losing support, that another form of support, another line, that would be a big problem. But for me, I'm still giving them the benefit of the doubt. Is let's just use the 20 there in blue, right, for now. Like that would be your big line where you start to, I think, get concerned that it's not holding the 20. But other than that, right, I'm going to give them the benefit of the doubt. It wouldn't shock me at all to see them try to push things through more. Just remember that the month tends to weaken mid-month, and then it tends to trail up after that, seasonality-wise, to be finished strong for the end of the year. And if you get that, it might be another great opportunity because much like this early Jan was, I'm not saying you'll then drop off, but I do think if they push this too far, too fast, like they're apt to do, it could set up a whole nother shot at being a bear at the right time in a big way next year. By sometime in the first month or two, maybe, I don't know, maybe the third. But anyway, that's what I would think. If they overdo it, I still think a lot of the data is going to come out and not really be all that wonderful, and there'll be a lot of things that will cascade through the economy that are negative right now that will start showing up, and people will say, well, that's not forward looking. But bad information or bad data tends to bring about more bad data, and bullish data tends to bring about more bullish data. It's just whatever the trend is, and I think the downtrend is still intact as of right now. And so I think eventually, once the seasonality and the other people's money get my bonus motivation is in the rear view mirror, they may have overdone it at that point. We'll see. I mean, we have no idea, but that's just a thought that I had that I thought I'd share. So I hope something I've shared with you helps you out this week or in the future. And thanks for tuning in. I'll see you through updates and so on and so forth throughout the week. Thank you.